Our first discussion now. Latest data from the Central Bank of Nigeria shows that the value of Nigeria's international trade deficit rose by 175.13% from $152.94 million in January 2022 to $420.7 million in March 2022. The Apex Bank's International Trade Summary Report shows that the total value of international trade was $28.77 billion in Q1 of 2022, with reports at $14.77 billion and exports at $14.01 billion, showing a total trade deficit of $764.69 million. Naira, beg your pardon. The report further shows that the huge dependence on imports has limited the CBN's ability to effectively manage the demand of foreign exchange, which is taking a toll on the production base of local manufacturers. Joining me live via Zoom to assess the impact of these figures on the country's economic outlook is a partner tax reporting and strategy at PricewaterhouseCoopers, Mr. Kenneth Erikume. Good afternoon, Mr. Erikume, and thank you so much for your time.
Good afternoon, Tolu. Thanks for having me.
Yes, Nigeria has failed to cut down its import bill. And of course, the Dangote refinery is yet to be completed and operational. Well, these elements, CBN governor was optimistic would help cut down the nation's import bill. Let's start off with the fundamental ratio of our import versus exports and its impact on the widening trade deficit. Your thoughts on the consistent deficit volume?
Yeah, thanks, Tolu. I guess, it's obvious from Nigeria's perspective that we are a largely import-dependent country, from basic consumption to luxury items across the chain. For things as basic as clothing, housing materials, fuels, everything is imported. And in terms of our export, we have not been able to unlock our potential as it relates to export, especially for tangible items. So when you x-ray the exports we are able to generate, it's largely commodities based, agro-related commodities, and a bit around, well, not a bit, a huge chunk from the export of crude oil and natural gas. However, the situation we find ourselves today is that while we export crude oil and natural gas, we import all our petroleum products, or mostly all of our petroleum products, which covers a huge chunk of our imports, because we do not have any refining capacity. So the same value addition problem we have in other sectors, including agri, also finds itself propping up when we're talking about crude oil and natural gas, and therein lies one of the biggest problems that we have as a country today. When you look at the expectations around our exports of crude oil, we should be doing about 1.8, 1.9 million barrels per day. But as of today, we're doing 1.3 million barrels per day, largely because what is produced or what can be extracted cannot find its way to the port for evacuation. And therefore, we'll continue to see this pressure, and then it cascades to everything from the FX liquidity, which impacts on our ability to produce, the manufacturing sector, as well as, in recent times, we're also seeing the impact across logistics and transportation. So in terms of the aviation fuel issue that has cropped up, and even the cost of subsidy. And there was a plan in the Petroleum Industry Act to do away with subsidy, but due to the price of crude oil right now across the world, it has been maintained. But that means that a lot of the revenue that should have been targeted at infrastructure, at education, at the various government services is now being put into subsidy. So this is, why I think the central bank highlighted, that, when the Dangote refinery comes on stream, it would serve to ease some of the pressure. And so we're looking forward to it. But again, looking at the Dangote refinery, which is in an export processing zone, the question would therefore be, would it be meant to deal with domestic demand, or would it be meant to deal with, the export market? So those are some of the questions that are still open for conversation.
Brilliant stuff there. But let me follow with the foreign exchange challenge in Nigeria. Definitely highlights the downside of the worsening trade deficit. I had the president of the Association of Broadly Shunned Operators here yesterday, and he was talking about how they want to reposition the market, how they can support the central bank. But I will ask you that, what new reforms do you think the nation can explore to position the country much more favorably?
Okay, first of all, we need to look, I think the first thing we need to look at is, in the short term, medium term, is to explore areas where we can unlock value from a trade perspective. And I've said this a number of times, that, the way, our focus has to be where we have the competitive edge. And that will be to, as quickly as possible, deal with the issue of crude oil theft. And if we need to put all our security architecture to deal with this, then it has to be done. Because this is supposed to be a time where we are reaping or benefiting significantly from the high crude oil price. And this would have been a time when we would have stabilized the currency, but due to the crude oil theft, we're unable to unlock value from the high crude oil price. So immediately, from a security perspective, we need to secure our oil and gas assets and ensure that it's delivering value. So that's the first thing. And then we then need to look at areas where we can, from a global perspective, provide services globally. So industrialization will be too long-term for us as a country. And even if we industrialize, we'll still be in a very competitive market. One of the areas where we have an edge is the area of language. The area of the high unemployment rate. It looks like a curse, but it's actually an advantage. And the high level of education. So we have a lot of graduates who are largely unemployed. So we need to explore how we can unlock FX gains from this, our natural resources, where we can provide outsourced services across the world. And we've seen that many countries like India have been able to do this, with the high level of skill, the language. They're able to provide support to countries in Europe, as well as the United States, in providing outsourced services. And those outsourced services could be anything, from paralegal to call centers, and things like that. So for me, I think that those would be an area where we can quickly unlock value, rather than focusing largely on NXP, where the foreign currency is earned from exports of tangible goods. And then the final thing I think needs to be done, because what you would discover, especially for investors, I deal with quite a number of corporates and investors looking at the Nigerian market, the huge potential of 200 million, million people, and it's quite attractive. But one of the areas of uncertainty that usually becomes a deal breaker is the area of, when I bring in my investment, what is the guarantee that I'll be able to take it out, take the returns out, using the same exchange rate that I brought it in? And would there be availability of dollars at the time when I need to repatriate? So we, pretty much need to look at that area and ensure that we give more certainty to the exchange market, and as much as possible, try to ensure that the so-called parallel market rate is not significantly different, from the official rate, because therein lies the arbitrage. And once that arbitrage exists, it means that, people can benefit from playing that arbitrage, and therefore, the squeeze will continue. So I believe strongly that as a country, we need to look at, harmonizing the exchange rates and eliminating, the challenge which we're facing, from an FX perspective.
Well, staying with that, there are some economists who believe that the massive dependence on imports has constrained the CBN's ability to manage the forex demand. There has been protracted scarcity of forex, which also threatens sectors like aviation, manufacturing, hence affecting their contribution to trade surplus and the overall performance of the GDP. Now, do you share this sentiment?
It's obvious, right, that once you are import dependent, then you would need to be doling out the FX to pay for those imports. And I think from a social perspective, you cannot liberalize, or you cannot stop the import, right? So over time, if you see some of the policies that the current administration have tried to explore, they are targeted in that area, which is, try to ensure that we substitute from an import perspective, so import substitution, integration with production locally, and things like that. So we have things like the rice policy, we have things like the backward integration policy, and those other policies. And those were trying to drive internal sufficiency, which would actually reduce import dependence. So it's clear that our import dependence is the big problem, but we cannot overnight cut off the imports, because it's totally impossible. So we need to ensure that our export capacity is revived. And that's why I think one of the key focuses for the government should be around securing our oil and gas assets. And then, after we do that, we can then begin to explore, some policies around outsourcing, because services is one of the areas where we have the competitive advantage. And then in the long term, we can then begin to look at, some of these policies, how we can enhance those policies, in terms of industrialization, local value add, backward integration, and self-sufficiency from a food perspective. So I agree with the sentiment, because it's logical, but unfortunately we cannot we cannot push a switch and turn our import dependence overnight.
Great stuff. Before I let you go now, of course, Nigeria has steadily recorded trade deficits since the fourth quarter of 2019, and when the land borders were shut. Now that the borders are open, do you see this propping up any trade surplus in any form?
It's obvious that with the opening of the borders, you will then begin to see more imports. So I do not think that there's going to be any sucker, anytime soon. I think what we'll see is a trend And this is just my personal opinion, and just to be clear, so that nobody's quoting me and saying this is PwC's perspective. But if you look at it from a logical perspective, the expectation is that with liberalization of imports, with opening of the borders, what you will continue to see is these trade deficits. So we must brace ourselves and be ready for it. And I think that it's the right way to go, even though it looks bleak, but it's the right way to go, because in the foreseeable future, we'll be looking at the Africa Continental Free Trade Agreement and how that is implemented. You cannot implement that holistically and optimally when you resist goods and services coming from other countries. So that would, give rise to some distortion and might give rise to reciprocity, where others are saying they will not take on your products as well. So I think we will see this trade deficit as a trend for the foreseeable future, pending when some of the measures which we've discussed on this program is implemented. When we begin to see that, I think there'll be a bit more alleviation of the problem. One of the big area, obviously, around petroleum products is something we cannot shy away from. And it is ironic that a country like Nigeria that produces crude oil, we are unable to, we're still importing those petroleum products, petrochemicals, and things like that. Now, so we are where we are, and it's impacting a lot of industries. So we just need to correct that first in the product, from the raw material perspective, which is our export, and then in the medium term also look at, supporting the Dangote refinery. The conversations around domestic supply needs to be on the table between the company, the NNPC Limited, as well as the midstream and downstream regulatory authority. Those conversations need to happen, as well as guaranteeing, because a lot of FX would have been consumed in the construction of the plant, and as well the purchase of crude oil is priced in dollars, so you cannot force the refinery to sell domestically in naira. So there must be a negotiation to find what works commercially for all parties, and it's for the from Nigeria's perspective, is for the betterment of the country. So those are some of the things I think from a strategic perspective must be front burner in terms of the conversation with the Ministry of Petroleum Resources, the central bank, as well as the key stakeholders in the private sector.
Great stuff. Thank you so much, Mr. Kenneth Erikube. He is a partner, tax reporting and strategist, PricewaterhouseCoopers. Thank you so much. Do enjoy the rest of your day.
Thank you. Thanks for having me. Enjoy. Cheers.